Little did people know about Michael Burry, the mastermind investor who predicted the housing crash of 2008 before the Great Recession. Not until the day when the film, The Big Short, was released, showing how this genius investor earned millions of dollars by betting against the housing market. He predicted a market crash, which was manifested when hundreds of thousands of investors around the world lost their money. And now, after 14 years, Michael Burry is once again hinting towards something not less than a recession. He has been seen warning people on various platforms, which alarms investors. What is he saying about the market? And can there be a recession around the corner? What should the investors do to mitigate losses and ensure returns? Let's know everything Michael Burry says that can terrify everyone in this video. Pay close attention to his warnings, because something really harsh is coming. But before we continue, here's the reminder to like the video and subscribe to our channel to watch more videos from us. Let's get started. Michael Burry has been tweeting and talking about possible market crashes and recessions since 2008. Investors would follow his crash-conscious mindset, but with time, they forget that a market crash is still possible. Recently, Burry came again and warned investors and corporates. But for average citizens, he had some good news. In his warning, Burry hinted at a two-part cycle that would be all connected. The first part will be multiple compression, while earning compression will be the second. What these cycles mean will be explained in the video, but let's first know what he talked about in his recent tweet. That very tweet was deleted later on. In this tweet, Burry said that adjusted for inflation, corporates and markets have already pocketed a significant loss. He said that in the first 6 months of 2022, S&P 500 lost its value by 25 to 26%. NASDAQ went down by 34 to 35%, while Bitcoin is down by 64 to 65%. In just 6 months, indexes have broken price drop records, while the crypto market faced dramatic losses the same way it had gained returns. Comparing it with the worst performance history, the first half of 2022 proved to be the worst for S&P 500 since 1970. As for NASDAQ, the first half of 2022 is the worst since 2008. Even NASDAQ never declined so much in the first half of any year on record as it did in 2022. Now let's look closely at what he means by the two-part cycle, the multiple compression and earning recession. The first part was multiple compression. But what is this in the first place? Multiple compression is the phenomenon where the prices of stocks continue to decrease because investors are hesitant to buy those stocks. Even if the corporate earn more and show a growth in their revenue, there's no positive effect on the stock prices. It's because, with time, the investors are wary of that particular stock, and since there's lesser demand for that stock, the prices go down instead of going up. There are only two motives that increase the stock price. First, when investors are bullish about stocks and buy them, and second, when the stocks bring higher dividends or returns. However, when the investors are themselves hesitant to block their money in stocks, since there's high inflation, multiple compression occurs. Investors find it hard to pay premiums on stocks due to the ever-increasing inflation. Premium is the difference between the original price of a stock and the price it's sold at. The difference has to be paid by investors, but when they no longer have the incentive to pay, the withstanding stock price starts to plunge too. According to experts, the stock price cannot increase unless bonds fall to pay the dividends and stock are risk-free. The second stage is earning compression, inevitably faced by already suffering corporates. But what is it? The earning compression is the phenomenon where a corporation's revenue generation decline due to an increase in the cost of production and fewer demands. In multiple compression, corporates face the problem of decreasing stock price, but their earnings increased anyway. However, in earning compression, the very revenue is contracted, and thus, corporates suffer dramatically. According to Burry, two reasons behind a corporate's loss lead to a shutdown and ultimately to recession. First, the demands will be less, so sales would not be sufficient to sustain the increasing production costs. And second, when the stock prices plunge. Due to the pandemic, demand increased dramatically. However, now supply has risen to a remarkable level. New supply chains and production plans were set worldwide to fulfill sensational demands once the pandemic was over. However, this made corporates stockpile every raw material to have a backup plan if demand ever increased to that level again. Here's where the bullwhip effect comes. In the bullwhip effect, the whole chain of corporates involved from production to supply of a specific product, start to have higher products in their warehouse than the original need. Let's try to understand that with an example. Let's say that at a supermarket, the entire stock of 1,000 boxes of masks was sold. When the superstore owner observes this, he orders 1,500 boxes of masks from his supplier. His supplier owns a giant, high-quality surgical mass-producing factory. He thinks the demand will increase further when he gets an order of 1,500 boxes instead of the previous order of 1,000. Therefore, instead of ordering fabric for 1,500 boxes, he orders material for 2,000 boxes. The fabric producer then imports fabric for 2,500 boxes of masks instead of 2,000 boxes, since he thinks that the demand will increase. This cycle continues to the final supplier and so on. Here it can be seen that the original demand was 1,000 boxes of masks, but it ended up in 2,500 boxes, which will continue to increase at every point. However, what happens next brings earning compression. In the next month, instead of sales of 1,000 boxes of masks, it only reaches 400 boxes. Now, if we see surplus products and raw materials present at every point of supply, this is extra stuff that's not needed and incurs the cost of storage every day. Hence, corporates bear losses. Inevitably, they have to sell products at low prices to mitigate heavy losses. The cost of production of more products was high, but they're not getting paid equal to that since fewer products are being sold. These fewer products do not bring the same profits as more product sales would bring. But this phase brings good news for average citizens who get to buy products at a decreased price. It provides a cooling effect during high inflation, and people can purchase products at the lowest prices. Let's summarize what Michael Burry said about a possible recession that can bring devastating impacts on corporations and their investors. But at the same time, there is some good news as well. Here's the summary of what Burry said. Multiple compression has already occurred where companies worldwide have battled decreasing stock prices. In the first half of 2022, S&P 500 lost 25 to 26% of its price. NASDAQ lost 34 to 35%, while Bitcoin's price went down by 64 to 65%. It suggests that a recession is underway. Next, there will be earning compression, which will hurt the most where corporates will suffer losses. It will be due to low demands and high cost of production, resulting in less revenue generation. When there are more products than the demand, companies have to decrease prices, which will lessen the burden of inflation. The interest rate could also be reduced to help these corporations eliminate the bullwhip effect. Hence, the investors must know that the companies they invest in won't earn too much in the next 6 months. The stock price can plunge harshly, while revenue generation will come to the lowest level in decades. Calling for a recession. What do you think? Will Michael Burry's prediction manifest itself? After listening to what he said about the market going down, in the history of making the correction prediction, investors need to listen to him. Comment right below in the comment section. Do you think a recession might be approaching the market, leading to a market crash? Also, please like, share, and subscribe to our channel to watch more videos from us. Until the next video, stay tuned.